Wonderful good day, ladies and gentlemen, and a very warm welcome here. I was in Munich out of our Commodity TV studios. Today we want to give you an update presentation of Altona mining after the sale of the Finnish assets. Altona was formed in 2010 and their Outokumpu project in Finland was financed and built on time and budget in 2012 and started production successfully. The mine outperformed all plans and paid back the project debt 2 years earlier than estimated. Finally, Outokumpu was sold for 112 million Australian dollars in 2014 at a market cap pre-deal of around 80 million Australian dollars. Afterwards, Altona returned 80 million Australian dollars or 15 cents a share to their shareholders in February 2015. Now the company concentrates on their Australian assets and wants to bring them into production. The Cloncurry definitive feasibility study and the permitting are completed. The ongoing exploration was very successful so far, with resources increased by 142%, and of course Turkey Creek was discovered. Some facts about the company today. The market cap stands at around 53 million Australian dollars and the company has cash of approximately 48 million dollars. This leaves a net company valuation of 5 million dollars for a full permitted project with good economic numbers which can go immediately after funding into production. The solid shareholder base with the top 20 shareholders owing 69% gives a solid basis for the future. What is now the new strategy for the future exactly? Well, Altona is focused on a transaction to realize and demonstrate value from the Cloncurry asset. A transaction could take many forms, like a joint venture, M&A or a potential project sale. Altona will avoid debt and dilution and aims to maximize the return to shareholders, and cash will be husbanded. At Cloncurry, Altona will continue with low-key, low-cost activities that add value and shorten lead times. Let's have a look at the underlying metal, meaning the copper market situation. Copper inventories are historically low, with only 5 days of consumption in storage. The Australian dollar prices are relatively stable and we see continued strong Chinese copper import by now. In 2014 we saw again a production deficit which might stay in 2015 through several disruptions, and so we see the supply struggling again. What makes the Cloncurry project and within the Little Eva project so special? The global resource stands at 287 million tons at 0.6% copper at the Cloncurry project in 12 deposits. It contains 1.65 million tons copper and 400,000 ounces gold, which you get today nearly for free at the current market cap. The Little Eva project focuses on copper-gold deposits only. Further deposits in the property are of course Little Eva, Bedford, Lady Clare and IVN. The geology is simple and the project is in the first quartile regarding size and grade for undeveloped open-pit copper projects in the world. The mining will be straightforward bulk mining with a standard 7 million tons per annum processing plant. The bankable study by GR Engineering Services in February 2014 showed again terrific economics. While all native title, environmental permits and mining leases are in place, the yearly production is estimated at 39,000 tons of copper and 17,000 ounces of gold. The NPV stands at 346 million Australian dollars at a 7.5% interest, real pre-tax. The all-in cash costs at $1.96 per pound and the capital cost is at only 231 million US dollars for the project, and in addition comes the low capital intensity of 6,000 US dollars per annual copper ton, and this honestly speaks for itself. The long mine life is at a minimum of 11 years scheduled. The concentrate will be trucked 65 kilometers to Cloncurry in half containers to the rail connection to Townsville Port. The power supply should come via a 9-kilometer line from the Dugald mine, proposed with 220,000 volt line or on-site power. The project will have groundwater and or access to a water pipeline. The workforce will be fly in and fly out with a 220-man village. The copper-only deposits, Turkey Creek and oxide ores are not yet in the DFS included, which gives even more upside potential and confirms the exploration potential of Altona's tenements. The maiden resource of 21 million tons here at those satellite deposits at 0.6% copper for 123,300 tons contained copper gives a potential for additional 1 to 3 years of production. And please keep in mind, an additional year of production gives approximately $40 million NPV in addition. Well, why is Altona so interesting? Very simple. Low market value for Cloncurry and track record of deals and shareholder returns. Altona represents a low-risk, cash-backed option and has a record of operational financial success, exploration success and shareholder returns. The company is strongly cashed up and Cloncurry is robust, development ready, has material scale and is growing. Altona is leveraged to a deal on Cloncurry. Check it out, guys. Thanks for watching Commodity TV and bye-bye from Munich.